Hello, everybody. Thank you for being here. I know it's like summer out there and our evenings are very precious. I'm actually at a campground right now, living that, life by design that we all want. So I apologize if the sound is a little bit echoey. I'm in a conference room that they have here. So happy to be here. My name is Natasha Phipps and excited to discuss with you about WealthShare and multifamily real estate investing and what we have to offer. And please feel free to ask any questions along the way. We have a small group here, which is nice, so we can have some back and forth. If you have any questions about multifamily or Calgary or, WealthShare, of course. So feel free to put those questions in the chat or turn your cameras on. We'd love to see your faces. And I'm joined here tonight with Darcy Boyden. Darcy, do you want to say a quick hello before we get started?
Absolutely. Welcome, everybody. Thank you for taking your some time out of your evening to join us for a presentation that Natasha's put together for us. It's exciting times in the Calgary real estate market, which is where we're focused. So looking forward to hearing and seeing more about this. And yes, as Natasha said, if you have questions, please put them in the chat. We'd love to respond and answer anything you might be interested in knowing about. Thanks.
Awesome. Thank you, Darcy. We also have one other special guest here. I'm not sure if he's going to say hello, but our exempt market dealer, George Nast, is here from Atlas One. So if you do want to say hello, George, go ahead. If not, no worries. I know your camera's off.
Yeah, I'm going to keep it off. I just wanted to join to listen to this great event. I've heard it a few times, but I always love hearing it again. So I'll stay silent and let hear the knowledge and wisdom coming from you, Natasha.
Awesome. Thanks, George. Thanks for joining us. So before we begin, we do have to show our investment disclaimer. Tonight's presentation is not an invitation to invest. This is an educational event. And if you ever want a copy of the disclaimer, it is available on our website, so you can read it in detail there. But we do also need to show it to you here this evening. Okay, so we are going to get started. Also, I'm really excited. My Canva is working properly tonight. So just briefly, I'm going to introduce our team really quickly. My name is Natasha Phipps. I'm the CEO of WealthShare, and I am joined here on the screen by my amazing partners of WealthShare, and we are also the trustees of WealthShare for the time being. And we co-founded WealthShare with a shared vision of wanting to share our knowledge and opportunities. And like so many in the real estate investing community know that we're better together than we are alone. And so we came together with the goal of building something like this. And WealthShare began just about a year ago. And it all started with that one property that kind of started snowballing things for us. My husband, Rodney, is pictured on the screen. He's more operations in the trenches every day. Monique Verlon, who should be here this evening, is our CFO. And then Darcy and Deanna Boyden are also trustees and co-founders of WealthShare. So we're very excited to have them and their long-standing experience in the real estate investing community. So that's who formed WealthShare. And I know everyone's here. The first thing you want to know before I dive into the who's, the what's, and the whys is what is the WealthShare offering. So I'm gonna show you this next slide, and then we'll go over it again at the end. But I've been to many presentations, and I always want to know, okay, what are we talking about, and who is it for, and does this even make sense for me? So just the WealthShare offering really quickly before we dive in is open to eligible and accredited investors. If you are not sure what that means, no worries. Our exempt market dealer team with Atlas One is there to answer all of those type of questions for you when it comes to suitability for you. The trust itself, and one of the driving reasons we went with the structure, was because it opened up private securities to not just accredited investors. And that's one of our mandates, is to try to make these types of opportunities open and accessible to as many Canadians as possible. And many of these private securities are only open for accredited investors due to the structure that was put in place. So we wanted this to be able to be open to as many people as possible, and then to as many types of funds as possible as well. So we are open to cash or registered funds. So RSPs, TFSAs, LIRAs, all of those accounts are eligible to self-direct your money and invest it in the things you care about and that you want to be diversified into. So all of those things were key components as to why we went with this vehicle, the Real Estate Investment Trust. Our minimum investment is aligned with our goal of wanting to be as attainable for as many people as possible. So we have a low minimum of only $5,000 or more, and your investment gives you a targeted 8 to 12% annualized returns. Now we say 8 to 12 because we offer an 8% preferred return, but every acquisition that we look at must meet our criteria and then meet a 12% or more projected return. What a preferred return means, if you're not familiar with that term, it means in this case for WealthShare, if our portfolio does not achieve an 8% annualized return, and that's taking into consideration everything, then us as the management group do not get a portion of the returns. So you're first and foremost, and then we are also incentivized as the management team to hit that 8% so that we can share in that return on investment. Our split of anything over and above 8%, us as the management team take a 20% performance bonus, 80% stays with the investors. And it is my understanding from everything I have researched that that is very competitive. And again, sticking with our mandate of wanting to be attainable and putting as much money as possible back into our investors' pockets. We're on a continuous raise right now. We're targeting $15 million initially because we're in the infancy stage. We need to build a portfolio. We're going to talk about that a little bit more later on, but continuous raise, and we can issue an unlimited number of Class B trust units that are available. Class A, I know I'm going to get that question. Class A was broken off for our first acquisition, which was the Bergen, and that's actually siloed in a separate entity. We weren't quite in a position like we are now to offer it inside of the trust as it stands today. So it is a separate siloed vehicle. So everything from now forward will stay in Class B. It doesn't matter. It doesn't change anything. It's just a different letter. Okay. I won't spend too long on this, but I talked about this a little bit at the beginning, kind of like our story. And as real estate investors, there's always that one, unicorn property that you're waiting for. And I'd been waiting a very long time to jump into the multifamily market here in Calgary. We were going through a recession for many years. And when the Bergen and Mission came up for sale via court-ordered sale, I was like, this is the one, this is what I want to start building off of. And very quickly, we learned two things. One is all of our investors were very excited by the property, but 80% of them wanted to use registered funds. And so we got to work quickly solving that. This vehicle is becoming more and more common as of this year, even. A year ago, it was not quite so clear how to solve that with taking registered funds in for long-term buy and hold multifamily assets. If you're doing land development or condo development, it's a very different thing. But in Canada, there is a lot of legislation around this type of vehicle for good reason. And the only way to do long-term buy and hold assets with cash or registered funds and accredited and eligible investors is with a mutual fund trust or private REIT like we have. And you have to have your offering by way of offering memorandum. So that's how we got here, because that's what you had to do in order to check all those boxes. And so that's why we chose this this vehicle. So I mentioned it briefly, but let's just define what a real estate investment trust is, or a REIT. Mutual fund trust, REIT, those terms are interchangeable. A mutual fund trust is a type of private REIT. There's public REITs out there that are publicly traded. That's not us. We're a private REIT. And it's a type of passive investment vehicle that allows investors to pool their money and invest in our case, multifamily, but it could be other things as well. So each REIT or fund may have a different offering, and ours is multifamily assets. And the benefits of a REIT is that you're able to get into that asset class and own a piece of it without having to do the entire acquisition yourself, because you're pooling your money. The investors purchase units into the limited partnership that the REIT then oversees. So the REIT is at the top, the LP is kind of the operational structure. And so it's kind of similar to owning shares in a corporation. And the benefit, of course, is the investors benefit from any appreciation or income generated by the properties without having to do any of that work. It's a fully passive vehicle. And it provides you a great way to diversify, because you could get into land development and long-term buy and hold and condo development and lots of amazing opportunities here in Canada in this type of structure. Why is my screen not going? There we go. So benefits of the REIT structure for investors. Number one, and this is a huge one in my opinion, is we are registered with the Canadian Securities Administrators, and we are highly regulated and governed. And that is good. A good example of that is the annual audited financials. That is a requirement for us to maintain our status every single year. That's a requirement. And so every year, you know that a third party individual group that's not related to us has taken a look at our financials. And I mean to the penny, to the bank charge, to every thing that you can possibly imagine. And so that is very valuable for the investor, because they know, at least once a year, someone from the outside is taking a very good look at this portfolio. Benefits, of course, are accredited and eligible investors, and it's eligible for the registered funds like we talked about. Speaking of registered funds, there's a whole, we're not going to dive into that tonight, but tax planning strategies around using your registered funds to invest in real estate. You can defer your tax events for later on. You can also reinvest the distributions that would be coming out. In our case, we do annualized distributions, but we have a DRIP option where you can reinvest your distributions so that you're growing your portfolio as well. Other advantages, of course, are that your funds and your portfolio is being managed by your management team, and each group out there will have a different team, so you can find the people that you align with. Accessing pooled capital will allow you to access larger opportunities. No need to qualify for the financing for these large acquisitions, right? So you're able to get into these institutional quality type of investments without having to do that all on your own or put everything together on your own. And it also allows you, lastly, if not most importantly, in times of affordability crisis and people struggling to know how they're going to retire, and uncertainty out in the market, diversification is everything. We talk about it all the time here. I talk about it all the time in my with my clients as a realtor, and that's everything. Diversifying asset types and location type is really, really key, and also timelines. Some investments make sense for 5 years, some of them are longer, and some of them might be shorter. So having a diversity of things in your portfolio is something we really, really believe in. So what is WealthShare looking at in terms of what is our strategy? We learned very quickly, like I said, that most of our investors really want to use registered funds. And so that to us is something that we feel very responsible for. We want to not take big risks. We're not taking big chances with our investors' money. We're looking for ideally turnkey, or, at least not a project that needs massive work. We're okay with lipstick work, but we're not taking on large scale developments or renovations or anything like that right now. I think there's plenty of opportunity out there for that, but not that is not what WealthShare's mandate is. So our first two acquisitions were, 2 and 3 year old properties that were just sort of caught in a bad situation, nothing to do with the real estate, solely to do with being mismanaged. And they were court-ordered sales. And newer real estate in great areas will always perform well. And it's always an asset that will be desirable. So that's really our kind of plan right now as we grow in the next couple of years. Our initial focus for location is Alberta, given that's our own backyard, but that's also what really is making a lot of economic sense right now when you look at the fundamentals. So even for residential investors, Calgary is very exciting right now. It is no different over in the multifamily space. In fact, I think the multifamily space is just starting to heat up a little bit compared to, residential has kind of been very hot here in Calgary for a few years now. It's continuing to be, but that inner city and kind of rejuvenation of our downtown and inner city is driven by the economic growth that Calgary in particular is seeing. And that's where all the multifamily is located. So it makes really good sense to look at multifamily right now in Calgary. If it was 3, 4, 5 years ago, we would not be looking there. That would not be where we would be looking because that wouldn't have been the ideal time, but now certainly is. So just briefly, as a real estate investor, whether you're going to acquire your own properties, eventually you're going to start thinking about multifamily. And I want to talk just quickly about why that is. Number one is financing options on the multifamily and commercial side are very different than on the residential side. So that's a big one for a lot of reasons. You can get much more favorable loan to value ratios, longer amortization periods, even up to 50 years. And the interest rates also do not follow the Bank of Canada rates. They follow the bond market. Now, the bond market in the last while has been on a serious roller coaster. But if you look historically, the bond market is pretty boring and kind of doesn't jump around too much. So that's a big thing. Bond rates are still lower than Bank of Canada rates. So that alone for a lot of people is attractive. And those favorable loan to value ratios as well. Also, in multifamily, you can really start seeing your economies of scale come into play. Now, I have a portfolio of residential properties and it just you just can't quite get those same economies of scale because you have a lot of units and a lot of in the same location, and you get a lot of benefits as a result. Even just your insurance is a major one. That is a major one that is quite a costly expense line. And as we grow, we're already seeing that already. So economies of scale. And this one, value is determined by net operating income. This right here is the largest kind of mindset shift from residential to multifamily. A lot of people are caught about what did that property sell for? What would that property sell for? In multifamily, it matters slightly, but not anywhere near the same. Your property value is determined by your net operating income and how this property is performing. And so just by doing a few strategic tweaks, even on a property, just with better management, you would be shocked at the exponential factor that brings in valuation of the property. So those strategic efficiencies, some cosmetic improvements, improving tenants, even just right now, currently bringing rental rates up to current market conditions. Doing that alone, you will build equity right now just by managing it properly. So management is everything. The MLI Select CMHC insured product is something we get asked a lot about. There are pros and cons to this, and it's not something we will always go for necessarily, but there's different levels to that as well. But what we do align with on the MLI program for certain is focusing on being a part of the solution here in Canada of providing more housing for Canadians, also being concerned with the energy efficiency of these properties and the accessibility as well. So all of these values of that program align very much with us, and some properties make more sense than others, but certainly this is something we're keeping a very close watch on. Just a note that the CMHC rates went up significantly this June. So the wait times over there are very, very long now. I'm hearing 12 weeks right now for a wait for a reply back on your CMHC MLI Select file. So, this isn't news to anyone, is just that, there's a housing crisis in Canada, right? There's an affordability crisis. And I just want to talk briefly about like what Canadians do in this time. And high inflation, high interest rates, and kind of there's still talk of recession. I was listening to a podcast yesterday and people that's scary words for them. We've been through that here in Alberta and are sitting a little bit differently. The point of talking about this is not to tell you anything you probably don't know. It's more to tell you about why Calgary and why Alberta, because all of this as a picture is just driving more and more people to Alberta because of affordability, right? Their money can go further. And that's really, really key factors right now for people deciding where to call home, where to live, or just where to invest. And that is what's really exciting about Alberta right now. In our property management arm, we see for any ads we put up, at minimum 50% of ads are out of town people looking for accommodations. So that's a little bit about, why people are looking to Alberta, and then combine that with really great economic opportunities out there, and so much a diversification happening in our marketplace as well. It's a really, really exciting time for Alberta. And first time in my life, I feel it's not so much built on that house of cards idea where it's all about the price of oil. And, it's kind of like make money while it's here. This feels a lot more strategic and diversified. And there's like, we could talk for a whole hour about some of the amazing businesses that are calling Calgary home now. And that's attracting some really desirable people to our city, which I'm really excited about. The net migration and immigration into Alberta is no secret. I'm sure many of you have looked at those stats, but people look for jobs, and then people look for a place to live. So that's what we're in the business of in real estate, is finding and accommodating those people. This one, the regulations around why Alberta could not be more important than it is in multifamily. I talked about earlier how your value of your property is determined by your net operating income. Well, if you cannot change your rents or bring rents up to market rent, and you're really restricted by legislative policy, you cannot get your net operating income where you would like to get it that easily, right? So this is a big one, because inside of a year, you most likely can bring your rental property up to current rent. Fixed term lease, at the end of the fixed term lease, you can raise the rent or find a new tenant or whatever you choose to do. There is no need for you to be forced to renew that lease where it's at, which is really great. So inside of a year, you can right that ship if it's a little bit mismanaged, let's say, which then improves your value, which allows you to refinance and build that equity in the property. Lastly, the quality of life in Calgary, I keep hearing, so many people moving here. That's the first thing they talk about, is the quality of life and the green spaces and the air and the mountains, and just how close Calgary is to all those amazing amenities that the mountains has to offer, and even our city itself has to offer. So, and then you top that off with, Calgary has Canada's highest household income with more affordable cost of living. That's a recipe for success to attract more and more people to Calgary. So that's very exciting. Quickly, I want to just show you the type of assets that you're interested in, and this is very much in line with the type of the assets we're currently reviewing, as well as our next acquisition. This was the one that started it all, the Bergen. This is a 21-unit apartment style building in Mission in Southwest Calgary. No, we did not Photoshop that Land Rover. It was parked there on photo day, so that was pretty neat. But that does tell you the type of tenants that we are attracting. And this property, there was nothing wrong with it, but the owner, it did go to a court-ordered sale for whatever reason. And so we were able to acquire this property last summer for $8 million. And we are currently just in the middle of our refinance after stabilizing and get everything turned over. This one had a lot of short-term rentals and it was very mismanaged. So we had to right that ship, and we have, and now it's humming and doing very, very well. So that's a pretty cool building. And the second property we acquired was also court-ordered sale. This is a 19-unit townhouse block in Windsor Park, Southwest Calgary. quick commute to downtown. You're very close to the trains, Chinook Mall, shopping, and on the west side of the city, which is desirable. Also court ordered sale. We just acquired this in May. So the last month and a half has been all about the Winston. We now have every single tenant on our leases and have this property is outperforming even our projections considerably. So where this property is sitting right now is we got everything stabilized, turned over. We submitted our package into CMHC 2 weeks before the deadline of the fees going up. So we're currently waiting for our CMHC underwriter to be assigned to us so we can proceed to our refinance, because these were both court-ordered sales, which means quick closings and you have to move very fast. They were closed with bridge loans so that we could close quickly, but then also get it how we wanted it before we went into CMHC, because you really want to spend the time to make sure that things are operating the way you want to before you submit to CMHC, because you can't really go back there. You can do a little bit of tweaks and adjustments, but this one is working out beautifully. And it's nice to, again, have a different type of asset class, right? We talk about diversification. So townhouses and apartment style buildings. Okay, so this one, there's supposed to be a strike or check mark on this. It's not showing, I apologize. But so this was something we were looking at. This, again, I want to talk about that we don't go after everything that we review. We're constantly looking at deals. If they don't meet our mandate or our mission that we talked about of targeting a 12% return to our investors, we move on to the next one. So the Winston, which we talked about, that one has been acquired and closed. And that was also court-ordered sale and gives us that 12% annualized return like we talked about. Opportunities we're reviewing now, and this tells you where we're going next. There's two properties we're looking at right now that are in that 20 million plus range. So our goal is to hit $100 million portfolio inside of the first couple of years. And that number is just not pulled out of a hat. It's really when we start to see the economies of scale with that number of units to get these numbers where we want them on an expense and potentially, hopefully even outperform our projections. So that's what we are going to be looking now. And then in the kind of further horizon that are about a year out, we have a few opportunities that we're analyzing as well that are in the $25 to $50 million range, where we're talking about hundreds of units or in that 100 to 200 unit range. So that's where we want to go. But we can't just start here at the 100 unit building. You do have to build up a portfolio to be able to get to that level of lending and loans. So that's what we have in store for 2023. And then just quickly, a few of our goals, which we have knocked a couple of these out already. Like we said at the beginning, we're targeting a $15 million raise. We want to acquire an estimate of $50 million of assets this year. And this one's already done. We had to reach a minimum of 150 investors. We now have, I think we just cracked 190 investors last week. So very exciting times indeed. That 150 investors is a requirement. In Canada, by March 31st, you have to have 150 investors in your registry to be a qualified real estate investment trust in Canada. So March 31st is the deadline every year for that. And we flew right past that. So very proud of our team for that one. And number one is to host value-driven events. Tonight's more of an info session type of event, but the last one we did was an educational session on what we've learned about court-ordered sales. We've bought $20 million of assets via court-ordered sale. That's not done very commonly, but yet what we learned applies to even buying a residential court-ordered sale. The process is the same. And so that event was super exciting for people because they get asked questions and learn from us as to what we have learned along the way doing those type of transactions. And that's just one example. And we want to continue hosting these value-driven events for anyone who wants to follow along with what WealthShare is up to. So again, it's not just about sharing the wealth, it's also about sharing the knowledge, because that is a big part of how I've gotten where I'm at now in my career, and my partners as well all operate that way as well. So we will continue that. And lastly is to share our values of accessibility and transparency to Canadian real estate investors, and remain accessible to as many people who might be interested. It's really interesting to see right now too, we're getting a lot of the kind of younger generation who are investing with us for their very first time ever investing in real estate, but it's getting them thinking, and they go, okay, I'm going to do this much this year and this much next year. And that could not make me more happy, just to even be able to teach them about taking control of their own finances. So we're very passionate about that here. Just quickly, in case we have any kind of newer to real estate people, in terms of how do we hit those returns? Because that's a really important indicator if you're not sure how we come up with those returns. This might be review for many people here, but real estate returns, and for how we are structuring deals, will not always have every single one of these necessarily, but most of them. So number one is cash flow. This is what most people know about, is just whatever's left over at the end of the month after you pay all your mortgage and expenses, whatever cash flow is remaining. That's, of course, a return on investment. Second one is value add. And this doesn't just mean doing renovation. This can also mean management and how you change that net operating income, because when you improve that net operating income, it improves the value of your property. So value add, whatever that might mean. Third, and this is an important one for these types of funds, is how the financing is structured and when the refinancing is timed for. So typically we're looking at 5-year windows for every acquisition. So especially year 1 to 5, we're going to be in that growth mode. And any acquisition that we close with a bridge loan, we will have a refinance in that first year. But it's really over time, when you have a portfolio growing, and you can have these refinances happening in the future. So I always suggest anyone, not just for us, looking at any REIT or fund like this, you should be looking at it for the long haul, in my opinion, because most of these acquisitions are planned for 5 years, and to get the full benefit and the full returns, that's the kind of timeline you want to be looking at. The next one is a passive appreciation, and just what the general market is doing. That can mean even rental rates going up, right? So as we know in Calgary right now, we're seeing a lot of that. And then lastly, and the main reason why we all look to real estate investing is to leverage the bank's money, right? We're looking to leverage the bank's money, pay down that debt over time, and use that capital to acquire investments where we wouldn't be able to do that on our own. So it's no different in multifamily. That debt pay down is a massive component. Now, please keep in mind, you have a little disclaimer here that there is no guarantee in our real estate investment trust as to what the returns will be. They are targeted returns, and then we offer that preferred return that we talked about at the very beginning, which we'll review as well. Is there any questions or anything I've missed? I don't think so. I thought I would check quickly. So just to summarize the investment real quickly, there's one other slide I'm going to show you, but just go over this again quickly in case anyone, I think there's a couple people that came in afterwards. The WealthShare is open to eligible and accredited investors, subject to the applicable securities laws. If you don't know what that is, our EMD, exempt market dealer, can help you. And registered accounts eligible for RSPs, TFSAs, LIRAs, and minimum investment of $5,000 or more. We offer a targeted return of 8 to 12% with an 8% preferred return, but everything we look at has a targeted 12% or more. And just to look at this briefly, this is a really important slide to go, how does the managers of ours or other funds, how do they make money? Because this is not like a joint venture where we're going to go 50-50 on everything, or 70-30 or whatever. This is not the same. We are managing the fund. We have also invested a significant amount of capital to set this fund up. And we also have some of our trustees are also investors as well into the Bergen. So just to go over this quickly, the important thing when you're looking at these things is the issuer fees. And what does that mean? So I'm the issuer, not I, WealthShare is the issuer, and every issuer is going to have their own set of fees. And this is the block that you want to read. So there'll be acquisition fees. Every time there's an acquisition, there's a fee paid to the management team, because it's a significant amount of work to get to that point. So that's how we get, paid or reimbursed for some of our time. Also, same with, there's financing fees, there's management fees. That's not property management, that's just management of the fund. And then, as we talked about at the beginning, the other sort of fee is our 20% share of returns after we hit that 8% preferred. So if we do not hit the 8% preferred, we do not get this last one. And then to add to that, it's important to know that your investment is always calculated off of what you invested. We're not taking those fees off of your investment. We have worked those expenses in as part of our modeling. So we've accounted for all of that. The last one that's also important to understand is dealer fees. And what does that mean? If you've never invested into a private security, that might be new to you. I mentioned earlier that our EMD, or exempt market dealer, is here. And you will find exempt market dealers when you're looking at these type of investments, particularly if they have an offering memorandum, then you will see an EMD associated with that file, or they'll have an in-house one. But George and his team over at Atlas One are our exempt market dealer, and their job, they're not, owners in WealthShare. They're a third party. Their job is to protect the investors, make sure everything is compliant and in line as well. They do a lot of vetting on the group that they plan to work with, and ensure that we meet all the requirements by the Government of Canada, the Securities Commission, and also that you as the investor, this is a good decision for you. So they will also guide you and determine suitability for you and what you're looking for in your portfolio. So they're a really, really great resource, and I highly suggest you check them out. So as I just said, Atlas One is our exempt market dealer. Now they are licensed in BC, Alberta, Saskatchewan, and Ontario. So for now, if you are outside of those provinces, we cannot take that investment in at this time. So that will be something we will be hopefully adding on to as time goes on. And then the only other thing I wanted to mention while we're talking about Atlas One is, because it can be kind of confusing when you start to look at these types of investments, particularly if you want to use registered funds. If you want to invest your RSPs or TFSAs with us or anyone else, there is another step involved. It's not just directly to the exempt market dealer. You also have to work with a trust company. So we work with Odyssey Trust out of Calgary. We're approved to work with them. Western Pacific out of Vancouver. And then just recently, we actually got approved by Olympia Trust to work with them as well. So again, we believe in having choice, offering people multiple options. And that's why we went the route that we did, to give people options as to where they want to house their registered funds. And those trust companies are sort of the go-between between the relinquishing institution or whoever is holding those registered funds for you now, and then bringing them over to us. So they ensure that we're a safe place to put your registered funds, that we meet all the criteria put out to be registered fund suitable. And then they also handle the actual transfer. So you have to have an account with a trust company to use your registered funds. You could have, some people have multiple ones depending on what they're investing in, but you do have to use one of them. And all of them will charge an annual fee. This is outside of our world. This doesn't have anything to do with us, but they do have an annual fee. So you want to make sure that the investment you're investing makes sense to offset that fee. It's usually no more than $150 with any of the companies. And but that is something to bear in mind if you're doing registered funds. Also, if this is your first time doing this type of thing, please don't worry. The Atlas One team, if you have questions about the steps and the process, they will absolutely help you and walk you through it, and have done it countless times before. So if you have questions about that, we're here to help you with that too, and can set one-on-one appointments. In the meantime, I'm going to pull up, I'm going to get a link here to put in the chat for our offering. So if you're interested to review the full offering, like the offering memorandum, the slide deck, the marketing materials, the declaration of trust, and all of those very lengthy documents, they are housed at the Atlas One website. Atlas One is, like I said, our EMD. So you need to make a profile at Atlas One and then go to the WealthShare offering. And there's also lots of other amazing offerings to check out on there. So it's worth doing regardless. And then you can review all the different offerings. And just so you know, if you do proceed with an investment, they will verify your identity, make sure you're a real human, and also your proof of address. And everything can be done digitally over DocuSign. It's quite slick, the technology they have on there. But of course, if you need any one-on-one support, they're there to help you. So hopefully that helps. I'm just going to pull up our referral code. Darcy, is there anything I missed or anything you want to add while I'm doing that? I'm just going to grab our referral code here. Oh. You stuck? He's stuck. It's not unmuting for you. Let me see if that helps. Okay. Oh, good. Any questions, anyone? The only thing I was going to add was I was going to get our referral code. When you go onto the Atlas One website, it's going to ask you for a referral code, or else if you use our link, then you do not need to enter the referral code. You can also just leave that section blank. So I'm just going to put our link in there in case that's your preference. Make it really easy.
Now that I'm muted, I just want to revisit a couple things you mentioned, which I think are extremely important right now for us Calgarians. We recent article just announced that we are one of the top 10 most livable cities in the world. I think we sandwiched somewhere in between Toronto and Vancouver to make it into the top 10. So for future interprovincial migration and immigration into the province, people have to live somewhere, and people coming into the province tend to rent a lot, which is good for us and our investors. So I'm super proud of that fact. Great to be named in the top 10 in the world.
Amazing.
So, yeah. And the other thing, I just wanted to also comment on adding the Olympia Trust as a trust company that we're working with. Super proud of the fact that we have 3 that you can choose from. So great work there by our team.
Yeah.
And I think that's about it for me to add. So thanks, everybody.
Fantastic. Also, Darcy's our in-house expert when it comes to investing with registered funds. Everyone wants just to have a chat about that as well. Darcy and Deanna have done a lot of these type of investments and have been a wealth of knowledge from that space too. But we're also open for one-on-one chats anytime for anyone who would like it. Any sort of financial type of advice, you got to go to Atlas One to our EMD, but talking strategy and just the basic understanding and process and questions of this, we're always happy to connect and learn more about all of you guys as well.